I found a tweet that I'd like to respond to, or that I've actually already responded to a user called Kevin Svenson, which I really like. He's a great TA analyst, and I like his content. So, but I think he underdid something a little bit, and I would like to kind of respond to that as a start to our TA. So I'm going to share this right now. So here's Kevin Svenson. If you don't follow him, you should. His name is Kevin Svenson _ on X. And here's the TA he did, which I like. It's basically an extrapolation of a falling wedge. So you can see what he's done here. He's pulled a trend line from here through here down to here, and the same thing at the top. Obviously you can see that, and here's the breakout. So what he's done is he's measured from up here or down here up to this top right here, and then pulled it to here, and he's getting a target of 52k as a kind of a roof, right? Or a resistance. And I like the way this is done. However, I think we should look at this and kind of, because this 52k is not correlating to anything. That was my first reaction to this. And therefore, I think there's a better way to do this. He's also on the weekly charts here, and he's using the wicks. When I go on the weekly, I tend to use the weekly close, and I think you would agree with that too, Rob, right?
Yeah, certainly the daily. If you're going to use a wick, then or within the week, then go to the daily close. I would say I would use daily close rather than the absolute wick, which can be different on every exchange and doesn't mean much. It just means this is where the liquidity was on this exchange at this period of absolute peak,
right?
Fear or greed. It's less meaningless than where the actual price action centered around, which is the closes.
Yeah, exactly. The closes are more significant. And to explain that, I'm going to first pull these trend lines the way that I would pull them in response to Kevin, from the weekly close, which is this one, through, kind of going to ignore that this isn't perfect right here. So I'm going to hit this one instead, right? And I'm going to do the same at the top. I'm going to pull it from this right here down to this, and we're going to try to line it up as well as we can. There we go. So now we have the same lines as Kevin does. But now when I switch this to line chart instead, you're going to see that they line up much better, see, like that, with the actual, where the price is actually turned around on the line charts. I don't use the line charts very often, but if you're in a large pattern like this, or long term, a line chart is fine, okay? So we're going to use the line chart for this one, because I'm going to hop back first, and we're going to pull the same line as Kevin did, which was from this weekly wick up to the all-time high wick, which is right about there. And we should be getting about, from this line breakout, about 52. So 52.2. Okay, cool. That's where Kevin sits. Yeah. I'm going to delete this one, and I'm going to make a new one from where we put our lines right here. I'll go to the line chart just to make sure. Yeah, cool. And I'm going to pull this, put this right here, and then I'm going to make a line from this top where it correlates to the top that we've been talking about, which is 48k. Now this gives me much more, I guess, trust in that this will be a topping thing, because we've been talking about 48k for, oh gosh, I think we've had that there since kind of the bull market or the bottom kind of came in and we started seeing a trend up. I think we've been talking about 48k being one of the levels where we might be hitting later on. And so I like this a bit more. All respect to you, Kevin, but I think this one is slightly more accurate to find that top, because it correlates to this very significant pump right here as well.